There is a very interesting seasonal pattern approaching in the pound-yen pair. Now, recent gains in the pound are starting to look stretched. The Bank of England has been hiking interest rates to deal with rising inflation, and that's resulted in a stretched long position in the CFTC report. However, the impact of these rising interest rates is now starting to be felt in the UK economy. Retail sales have recently fallen in the UK, and the UK housing market is now in one of the weakest places it's been for the last 12 years. Therefore, the Bank of England may be more hesitant to hike interest rates now and feel that a lot of the bank's work has been done. Now, in contrast, the Bank of Japan may still need to exit its yield curve control policy and maybe even start raising interest rates. The weakness of the yen is of a concern politically in Japan, and the Ministry of Finance could intervene and strengthen the yen at any point. Therefore, pound yen selling does make sense from a fundamental outlook. Seasonally, the pound yen has a very weak period ahead, with over 85% of falls around the 20th of September to the 8th of October. So pound yen selling does make sense from a seasonal perspective too. The average fall has been 2.16%. So is the pound yen now ready to drop? This is definitely one instrument to watch as we see upcoming decisions from the Bank of England. The biggest risk here is that the monetary policy outlook from the Bank of England and the Bank of Japan changes. Remember that HYCM clients can access the SeasonX product in order to analyze over 25,000 different currencies, indices, commodities, as well as individual stocks. And all you need to do is contact your account manager for a free trial, and you can get started right away. Certain products and services mentioned herein may or may not be available to all clients, depending on which HYCM Capital Markets Group entity their trading account adheres to.